Hey traders, Nick Shaheen looking at Slack. Work is the ticker. They reported earnings today is Tuesday, 9/8. They reported earnings after the close, and maybe it was unlucky that they reported on a bad day that followed two bad days last week, or not. The reaction is negative. It is trading about 20% below where it closed on Tuesday, so about $23 and change. So somewhere in here. Oh, okay, yeah, that blue line. All right, so could we have seen this coming? Yes, and I thought it was going to come earlier twice already, and they averted disaster, and I'll explain to you. But I'll start with the point of the video is if I'm long for whatever reason I'm long, which I'm not, disclosure, I don't have anything on it. If I'm long it, this is not the place where I panic out. Because first of all, we have had the COVID disaster, which is a test unlike any other test. And we rallied from that, and we gave it all back, except for the overreaction of a few days. This is a daily chart. So for all intents and purposes, this is the base. So if I'm not panicked out yet, maybe it's too late to panic. Now, caveat to that is that we have had bad days in the stock market, and the stock market could continue falling, and therefore it will probably drag Slack with it. But from an investment perspective, this would be even a starting point for somebody that said, "Dan, I missed it. I wish I was long." Like if you said if you were thinking about buying it up here and you're not thinking about buying it down here, then you're emotionally involved and you can't make a decision. And this is not a recommendation to go long. This is like ABC stock. If I'm looking to buy ABC stock up here, and then up here say, "Man, I missed it twice. I missed it 3 times," and I'm not trying to buy it down here on this chart, then I should probably leave that decision to other people, because I'm clearly more emotionally deciding things, and that's when I make mistakes. So let's look at what you say. Well, BS, you didn't see it coming. I'll show you that I thought I saw it coming twice, and it didn't, and it stopped halfway. So these are my lines. On the way up, I saw the neckline here, the little zigzag green coming. I didn't know when it would happen, but I knew that as soon as they trigger it, which was the green line, they were going to rally. And I knew it was going to go in 2 bursts. A burst, a relaxation, and another burst. They over-delivered. They should have stopped here, in my opinion, here. But they over-delivered, and that's fine. And they gave it right all back up. And then if here, I would have probably said, if you didn't get out yet, you shouldn't get out now. And they bounced. And when they started bouncing, I said, uh-oh, now we're looking at like we're drawing the right-hand shoulder. And I drew this way back then in June that I said they could be drawing a right shoulder. And if so, then they're in danger of losing that neckline. And then if they do, then they'll be doing this. They do the right shoulders. They drew the right shoulder, but then they bounced. So I said, okay, I'm going to punt my right shoulder comment later. And then finally they broke down, but they averted the disaster. So this, and then I put a trader alert, a trade alert saying work lost support. Had it triggered and it came within pennies, then it could be finishing the job on the head and shoulders. So it could be coming to here, at which point it would be a buying opportunity. So here we are through that. So it's a buying opportunity, in my opinion, from a trading perspective. So why was this important? Because if I look left, and it's part of the thesis today, if I look left, if you look at it, look, take this out. Take all of this mumbo jumbo out. All right. And I was sharing this with some friends, 1 trillion out of the market. Okay, so let's use crayon and make it an easy. So this was a neck they held until they lost it, right? But it was a roof they lived under for a while. Prior resistance becomes forward support, right? So that was the case. Then they fell back to where? The other line that acted the same way. Here, you can argue that you can visually separate the action of ping pong, then you get COVID, and then ping pong inside of a level. And here they are below it. So let's address the fact, ignore the fact that you're good enough to find this little ping pong level. Forget it. This was a definite roof, was it not? Boom, 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 failure. It finally broke out right there. So I remember this line. So does the market. So look how well it's behaving inside of it. And this, the blue line, is where it is right now. So they are fighting for this. This brought this rally. This bottom brought this rally. This bottom brought this rally. So every bottom brings a rally. This one is, in my opinion, an outlier. We should not get this again without the market crash, the general market crash. So could it go lower? Sure, but not alone, I don't think. It would need a trigger that is beyond its scope of fundamentals. So this is nothing to do with fundamentals. Whatever you believe about Slack, you believe about Slack. I use it every day. I host my the chat room on it, but I don't pay them a penny. And the minute they force me to pay them something, I'll develop my own and I use something else that's free. 18 years of sales inside the stock price currently. It's not crazy. It's not great, but it's not crazy. And they don't have any profits yet. So in the scope of this versus Zoom, this is way, way cheaper. And it's gotten a lot cheaper now. So if I have profits in Zoom, I'd roll out of that and go into this if I like either of those two companies. So the statement is it's too late to panic out at the blue line right now. It's too late to panic out. Let's see what they do here and here. So I will put an alert here. So I'll see buy the dip with a question mark because I want to know how the market is doing while it's doing its thing. It's not a clear. I wish that it has a copy mode here. So I don't know what the market makeup looks like because even though the micro of the one stock may look one way and bullish and whatever, it does have to trade inside of a macro that may or may not be good. So if the market is overextended, then there's an additional extrinsic risk in that. So regardless of my story, I need to make sure that the environment is not shit. So this is the micro macro thing. So from a level perspective, too late to panic. The panic already happened overnight. From an investment perspective, if you were thinking about going long, if I was thinking about going long it here and here, and I wish I had gone, I missed it, then I should start nibbling down here. If I know options, then I would probably start selling puts or put spread. The best time to sell a put or a put spread to own the shares is when everybody else is panicking because the VIX is high. The implied volatility for this particular stock is high because it's falling 20%. So the puts are going to be super hot. So if I sell the put and then the next day nothing happens, just calming, that fact will bring me profits right away just from selling the put. And if not, then I'll own the shares. Where it all depends on where I choose to own the shares. Selling a put puts me on the hook. I have to commit to buying the share, so I don't sell the put unless I'm willing and able to buy the share. So it's a great way to get into a stock early, leaving room for error. So if I want to own it at 20, I can probably sell an $18 or $16 put tomorrow under when everybody's having a tizzy through October perhaps and collect a nice premium. I don't know. I haven't looked at it, but this is the kind of things I would look at on bad days. I did the same thing with AMD during COVID, and the result was I sold AMD puts at $20. So I said to somebody, I will buy your shares at $20 if it goes below $20, and they were July puts. I did the October 1st, and then it fell more, and I added in July. The July batch at $20 gave me over $2. So I would have broken even at less than $18, $17.80 would have broken me even in AMD. AMD, it was almost 100 2 days ago. So those are the good days where the trades that come from those could be an easy way to catch a falling knife while leaving room for error. But again, I don't sell puts when markets are near all-time high. I don't sell puts when I don't want to own shares. I would rather do it via put spreads. If I sell those, then I'm limiting my maximum at risk, so I can go to sleep knowing that if it goes to zero, I'm protected. All right. Nick signing out. So try to minimize the emotional aspect of it, and this is like the perfect example as to put it in plain simple English. FOMO. If I had FOMO up here and I didn't act on it, and I'm not acting on the opposite of FOMO down here, then I should revisit this FOMO next time. I should remember this situation, even if I don't want to trade it. When something is rallying, when Tesla is rallying and it's extremely high and I feel this urge to buy it, I should think, wait, I remember that happened with Slack or something like that. Anyway, Nick signing out.